Welcome to the Business Standard Banking Show. Tamilnad Mercantile Bank is an old generation private sector bank based in Tuticorin. The branches of the bank are mostly based in Tamil Nadu. Today we have S. Krishnan, the MD and CEO of the bank with us to talk about the Q3 earnings and the future roadmap. Mr. Krishnan, welcome to the show.
Thank you very much.
Before I come to the numbers, if you can give us an update on the chairman appointment. In September last year, RBI rejected the name proposed by the bank. Has the bank made fresh suggestions?
No, the bank is in the process. The bank is in the process of making a fresh suggestion. So we will be letting know as and when we finalize and also the RBI approves that. Nevertheless, that is not a big one because it is a part-time non-executive chairman. The board is a fully professional board representing the different disciplines. We have chartered accountants, we have company secretary, we have IITians, we have business magnates, and besides that, as the MD and CEO, you know that I am also coming with a rich experience in the banking field. So right. The part-time non-executive chairman post is not a big issue.
Now coming to the Q3 numbers, the advances growth were about 8.8% year on year, which is way below the industry growth rates. Are you being cautious or conservative?
If you look into the total advance growth, you will feel that yes, it is true. I am grown only little less than 9%, which may lead to infer that I am cautious or careful. But let me tell that basically the bank is focusing on the RAM segment. On the RAM segment, we have a total exposure of around 89%, with the corporate representing only 11%. So it will be more interesting to look into how I have grown within the RAM segment. If I take the retail, I have grown by around 16% year on year. Agriculture, I have grown by about 13%, and MSME around 7%. So if you look into the growth in the RAM segment, it is decent. As far as the corporate is concerned, I have degrown. That is a cautious decision, because we always feel that we will be having the RAM as our focus area. At the same time, does not mean that I have closed the doors for the corporate. We will be very choosy in selecting the corporates. If I get a good exposure, definitely I will underwrite the corporate exposure. So when I look into the RAM segment growth is decent, as I was giving the breakup for the retail, agriculture, and the MSME. I have given the guidance to the street that during this year, we will be growing overall around 10 to 12%, and we will be able to definitely achieve that.
And FY24, if we can look ahead, what kind of growth projections you are looking at?
It will be too premature, but still I can say that I expect a better 23-24. Overall, the economy will be picking up. So I expect that I may be growing around 15%.
On corporate, you said the corporate book has contracted. So, I mean, what is the strategy on wholesale lending for the bank?
See, the strategy is today I have the RAM and corporate mix of 89 and 12. Probably over the period of next 2 to 3 years, I may be going something like 80-20.
80-20. Okay,
yes.
So the corporate book will increase slightly.
Will increase.
3%.
Yes. I will be more concentrating on the mid corporates, keeping in mind the size of the bank and the strength of the bank, where we understand. So we'll be, maybe the large corporates will be very selective to some extent.
Also related to this issue of loan growth, why I am focusing on loan growth so much, because you are sitting on a huge capital adequacy ratio, which is close to 25%. Right. Now there is a cost of capital. How do you plan to deploy the capital optimally?
Okay, good question. But I will also request you to look into my other parameters. It is true that I am sitting with a huge capital, with capital adequacy ratio of as high as around 24-25%. But I will request you to look into other parameters as far as the shareholders are concerned, how their values are not only protected, but also have enhanced. If you look into my ROA is 2, ROE is 17.14, the net worth consistently increasing quarter after the quarter, EPS is 17.66, and book value is 425. If you look into the PB ratio, probably still there are good scope for the market, right? So
Right.
the NIM is another area. If you look into, my NIM is 4.5. At the same time, as you rightly said, we are also conscious of optimum deploying of the funds. We are also taking a lot of transformation initiatives or in the process, more particularly on the digital front. Some of the transformations may mature within this fiscal. Some of the transformation may spill over to the next fiscal.
Right.
These things are expected to give me a boost on my top line. Not only the top line, will also be saving a lot of cost for me, which again will go to my bottom line.
Now coming to the liability side, the deposit growth was almost flat, 3% growth year on year. What would be your strategy to beef up resource mobilization?
See, as far as the liability part is concerned, I was telling that normally, as you were telling that I have huge capital and I'm sitting on that. Similarly, sitting on a huge liabilities without a matching deployment is also not good.
Right.
Right? I am very cost conscious. I look into the deployment and then mobilize. You may be knowing that the recent past there is still a rate war on the deposits.
Right.
Amongst the banks, right? Now,
Yes.
where I require, definitely I will be increasing the deposits. If you look into where I have lost, if I see CASA, in SA I have grown by about 9.5%, and in CA I have grown around 12%. A reasonable growth when I compare with the overall deposit of 3%. That clearly indicates that I have shut down the term deposits. I have not grown in the term deposits to the extent. And that growth may not be very difficult the moment I increase the rate of interest. The ALCO of the bank took a call, maybe last month we revised. Again, the ALCO will be meeting very shortly. They will be deliberating on the further revision, if any required. So we are aware of the market conditions. Based on the requirement for the deployment, we will be definitely mobilizing more deposits.
So that links to my question on the margins. As you
Yes.
know, as we were told that banks ALCOs are meeting twice or thrice a month these days, because interest rates are moving the interest rate market is quite active and dynamic. So your net interest margin is 4.5% in the December quarter. Do you think the bank would be able to hold to those kind of levels, given there is increased pressure on cost of deposits?
It will be a challenge. Let me tell that 4.5, maintaining 4.5 NIM will be a challenge. And you will agree with me that the NIM of 4.5 is also on a very high side. Right? That is what it is. So maintaining that will be very, very challenging. But we at TMB always look the challenge as an opportunity and then make all the efforts to see that how we can. But going forward with the hardening of the interest rates for the deposits, and Q4 normally will be further demanding quarter, where there will be a demand for both the liabilities and also the asset side. Because of the increase in the assets, there will be a demand for the liability side. Hence, there will be an increased cost. Hence, this 4.5 may be coming out a little less. The guidance what I gave to the street when I took charge of the bank, I gave that this fiscal I will have a NIM of 4+, and definitely we will be maintaining that comfortably.
And finally, sir, if I can ask you, is there a plan to revamp the branding of the bank like some of the private banks have done? I know TMB is still based in Tamil Nadu, mainly based in Tamil Nadu and the surrounding areas, a southern-based bank. Is there a plan to change the branding and become a pan-India presence?
No, I will split your question into two parts. One as the branding, another as the pan-India presence. I will answer the second question first as far as the pan-India presence is concerned. That very recently, the RBI lifted the embargo which it had put about 3 years back on the branch expansion. So immediately after that, we took stock of the situation and I took a paper to the board and got the approval. By end of the fiscal, we will be opening around 25 additional branches. I'm left with hardly 2 months, but all the things are in progress. Even today, I took stock of that. Very shortly, the bank will have its first footprint in the northeastern states. the northeastern state, the first footprint. While we expand, we have also kept in mind the need for a pan-India presence. So all the potential centers have been factored. I'll be coming out with the detailed locations in a short time to you, and also I can tell that I am definitely expanding in the northeastern state. As I said, very shortly I will be entering the other parts of the country also we will be. And thus, going forward, the bank will be made as a pan-India present. Coming to your first question on the branding, as I said, we have taken a lot of initiatives. One such initiative is how I can have a total business process reengineering, which may include the branding also. So these are in the various stages. So as and when I am able to get certain clearances from the board and it materializes, I will definitely let you know. But the work is in progress.
So we can expect a fresh branding of
yes,
Tamilnad
yes,
Bank
yes.
in the coming months.
Yes, yes. Absolutely right. Absolutely right.
Sir, it was a pleasure talking to you. Thank you very much for speaking to Business Standard.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.